Happy Friday, folks. It's Daniela Cambone here, welcoming you to a brand new episode over at StansberryInvestor.com. I'm thrilled to be joined by my latest colleague here at Stansberry Research. Please welcome Matt McCall. He's the newest editor for Stansberry Research, behind several newsletters, including the McCall Report. Matt was also the founder and president of Penn Financial Group, and he's known across Wall Street for his ability to find the next big winners before they become household names. And we're going to be talking about his outstanding track record. But first, welcome to the show, Matt. Nice to see you. Welcome to the team. Happy to be working with you every day now.
Yeah, thank you so much. It's great to be here. It's great to be on the team and joining you. You know, I will say I did a little bit of research. I was going back finding, because I know I had met you. Obviously, we did something like a year ago, but prior to like 10 years ago, and I was able to find a video. I'm gonna have to send it to you.
No,
it was at like some gold conference in New York City. It was right where I live, like a block. Oh my God, you look so fantastic. I looked so funny back then. My hair and my suits were so bad, but I'm gonna send it to you and get off. But we literally talked gold, and it had to be 10 or 12 years ago. It was crazy.
Wow, I would love to see that, Matt, and obviously not share it with the public. But,
yeah, exactly.
But thank you.
Yeah.
Thank you for that. We've obviously come a long way. I'm happy you mentioned gold because we're going to be talking about that. But first, I'm happy to share you with the audience because you've had a lot of incredible calls throughout your career, including Bitcoin. We'll talk that. But first, just curious to get your sentiment on where we are at in the market. You know, a lot of banks have been coming out saying, hey, don't be surprised if we see a 10, 20% correction in stocks. Yet I feel like we've been hearing this for the past, 3-4 years. What's your take?
Yeah, I that really been hearing it from, in my opinion, for probably the 20 plus years I've been in the market. Anytime the market goes up, everybody's looking for a pullback. I just talked to some people yesterday about this, and I got a similar question. And I kind of laughed because I like to bash the bears on social media because they're just wrong all the time. And, you always like a broken clock. I actually have a watch right now that I'm not wearing it, but I have a watch that's broken right now. It's still right twice a day. The bears, I mean, they're not even right twice a day. They're not right twice a decade typically. You're going to keep calling for it. And eventually you do have that 10 to 20% pullback. But the thing is, the market could have went up 100% in that time frame as you're waiting for it. A lot of people freaked out a couple of weeks ago when the market's down about 5.5% from an all-time high. What people don't realize is that was the first 5% pullback we had in all of 2021. Typically we have what's called the correction between 10 and 20% pullback in the market. It happens between 13 to 15 months. So just over, just over a year, you typically have one. So a 5% pullback for the first time all year is healthy. It's normal. The problem is we got accustomed to stocks going up every single day. And that's just not reality, Danny. It's just not the way it works. So pullbacks to me are great long-term buying opportunities. If you're looking to have your eye on a car or a house, it's your dream car, your dream house, and you say, you know what, if that pulls back just 10%, I'm buying that car or that house. You see the same thing about stocks, but when a stock pulls back 10%, you say, oh my God, it's falling apart. The market's over. It's ending. The world's ending. And the problem is, majority of the media is so darn negative. And, I was at Fox for 10 years and Fox News and Fox Business. I saw how they really portray the market and negativity gets eyeballs, it gets clicks. And unfortunately, there's too many people watching it and using that for their investment advice.
And that's why people love shows like ours, Matt, where we tell
agree.
the truth. We tell it like it really is. Okay, so let me ask you this. What happens if the Fed is forced to raise interest rates? Would that not cause that correction that people are anticipating?
Well, they're starting to taper, and that's going to be the first move that we're going to see. And I think that's priced in. Everybody freaked out earlier in the year, like a year ago, I guess to say, when the yield on a 10-year got crushed during the pandemic, which is natural, of course, because people are buying bonds, and as bonds go up, the yields go down. Makes sense. So it snapped right back to where it was pre-pandemic. It got back to about 1.3% yield in the 10-year. This was months ago. And everybody said it's the end. It's over. We just got back to where we were pre-pandemic. So the fact that we got back to normal is good. Now we have the 10-year about 1.55%, give or take. We are so still historically low. The Fed at some point will raise interest rates. I don't think it happens for years, honestly, because we'll get to that in a second, but I don't think that was 3 years. But even if it does go to 2%, Danny, we're still so historically low that it shouldn't have a big effect. And so many companies are sitting on so much cash. This isn't 2007, 2008 again, where if interest rates tick up, they're so leveraged, it hurts them. We don't have that anymore.
Good point.
We actually have a very good economy. We have corporate profits at the highest level ever. We have companies sitting on more cash than ever before. We have more money in M2 in the system than we've ever seen. More money in checking and savings accounts for Americans ever. We have money. We're not leveraged to the hill. And, you know, maybe that's because the government keeps printing money. Maybe so I don't know.
Right. So to your point, why do you think it's going to take years before they're able to raise rates? How are they going to be able to fight inflation? Or do you think they don't care to?
I don't think they care to, honestly. Because what president, I know the Fed and the White House are supposed to be completely different. I beg to differ, because typically they are appointed by the president, not this one, but typically they're appointed by a president. But they typically do work hand in hand. It might be behind the scenes, but they do. You know, they both want the economy strong. That's what they want, because you don't get reelected if the economy is terrible, and the Fed looks really bad if they ruin the economy. So no Fed president and no president of the United States wants to be the one responsible for jacking up interest rates and putting the country into a recession. I mean, that's just ego. It may not be the best thing for the country. To me, start raising interest rates now. I'm okay with it. The economy looks pretty darn good. Let's raise interest rates. Let's deal with it now. So I think they kick the can down the road, Danny.
Hey, and that's such a good point, Matt, but also frightening, because if no president wants that as part of their legacy, well, how does that play out?
I know. I mean,
how long does that go on for?
I mean, you paid a piper. I mean, I've been saying, heck, I wrote a book called The Next Great Bull Market in 2009 at the bottom. And one of the chapters was about hyperinflation. I thought 12 years ago, we were going to have to deal with hyperinflation. Look how much money's been printed in the last 12 years, and it still doesn't look like it's on the horizon. So I'm not an economist. I'm more of a realist, and look at things as real, because I believe economists are one of my best friends as a meteorologist. So I always hate saying this, but I think weathermen, weatherwomen it's the easiest job in the world. It's partly cloudy out, Danny. Right now, it's about 75 degrees. Thank you so much for that. I had to turn on the news for that. Economists are even worse, because they'll tell you a recession happened 10 months after it happened. They don't tell you, they're backwards looking. So the problem is we have economists trying to figure this out. And in textbooks, it looks one way, but in real life, it's another way. To me, inflation's been here ever since I've been an adult. I do the grocery shopping in my house. You know, I'm sure you see that, you go to the grocery store. The price of eggs, the price of beer, price of everything's been going up for many, many, many years. Today, what do we have? Aluminum at a 13-year high, I think. Zinc at a 14-year high. Copper, the inventory level is the lowest since 1974 at the LME. I mean, crazy. I mean, so we have inflation like already. I don't know. It's a tough answer. I don't have the answer to it, honestly.
So just getting back to your views on the stock market, and how much more fuel is left in the system. I mean, is it really reflective of American economy?
But the stock market?
Yeah.
If you ask me, yes, because my entire paycheck's based off the stock market. So for me it is. But I was listening to Bloomberg Radio on the way in here, and Goldman Sachs earnings came out, and they were just blown away about how much money Goldman Sachs made in the last quarter, while a lot of Americans are still hurting post-pandemic. So there is always a disconnect. I don't think they go hand in hand. That being said, I believe in a trickle-down effect. I believe that if corporations are doing well, it means there's more demand for goods and services, which means that we need to hire more people, which means more people are making money in the workforce, which means they spend more money, and the trickle down. I know a lot of people don't believe that, but I believe in the trickle down effect. So to me, there is a tie into that.
Let's narrow it down now by sector. I want to talk Bitcoin with you. That was one of your boldest, best calls in your track record. You suggested to your peeps that they get in around $600.
Yep.
So today's a great day.
It's a fantastic day for me.
Today is a great day.
It's even better because it's October 15th, so it's 6 months past tax day. So I always do my extension, and I just got an email of how much I owe. But about a quarter of my net worth's in Bitcoin and altcoins, so it kind of evens itself out. I feel okay, writing the check to the IRS, but I also see how good Bitcoin's doing.
Right.
Yeah, I think Bitcoin to me is now a true asset class. It's worth about what, $1.2 trillion, give or take, market cap for just Bitcoin itself. Over 2 trillion for cryptocurrencies. Jamie Dimon of JP Morgan came out this week and still basically pushes aside, which blows my mind. I mean, such a hypocrite in my opinion, because meanwhile, JP Morgan's investing in it for their wealthiest clients. So
Right.
if it wasn't real or true asset, what the hell is he doing? I mean, so eventually it will be a real asset class to everybody. To me, it's an asset class.
Okay. Do you subscribe? We have a lot of people with bold calls coming on for Bitcoin. 100,000. Max Kaiser says 220,000 by year end. Could you see that happening?
By year end, I think that's pretty bold. If it did, boy, I would be happier than if I am. I don't know if I see that. I've been saying since the dip, when it dipped down around 30,000 a few months ago, that we'd have a new all-time high by the end of the year. Within 12 months, 100,000. I'm a buy and just hold. I don't plan on selling anytime in the next several years. I think 250,000 is very attainable in the next 3 years. I think it's going to be very volatile on the way up. But it comes down simply, Danny, to supply and demand. There's only going to be 21 million. There's 19 million, give or take, out there now. About 4 million have been lost. So you're looking at only 15 million Bitcoin out there. Supply is not increasing. I mean, a little bit's coming online every day being mined, but very little bit, while demand goes up.
Okay, a lot more questions on this one for you, Matt. Yeah. You mentioned Jamie Dimon, another hater of Bitcoin. Ray Dalio says, well, look, the more success and the more Bitcoin keeps coming up and up, government at one point will stop in and stop it. Do you think Bitcoin can be stopped by the governments?
I don't. No, I really don't think they can be. And the thing also is it truly a replacement of fiat currencies? I don't see it as that. I see it more like gold. More of a store of value, a true asset class, because you can't say we're going to go back to the gold standard. I don't think it's going to happen. You're not going to go to your local bodega and chip off a piece of gold and pay them with it. So it's not a real currency. Where Bitcoin, you can actually go pay. It's very fungible too. So I think Bitcoin more of a chance of gold to be currency at some point. I don't think it is. I think the government shouldn't worry as much about this and stay the heck out of it.
You mentioned altcoins, so I'm curious. You're not a Bitcoin maximalist then?
No. I think so. One of the greatest investments of the 90s and 2000s was software. You think about what software did for us before Excel. How did we get all these formulas done? I don't know how we did it. Like calculators, we actually had to use pens and paper. So software changed the world, and some of the best investments in the stock market over that 20-year time frame were software companies. To me, altcoins, not all altcoins, there's thousands. I think at the end of the day, we probably have 40 that make it, give or take. Those altcoins that make it, that's software 2.0. A lot of them are solving problems, and the way software did 20 or 30 years ago, and they're eliminating middlemen. So you're going to eliminate title insurance, you're going to eliminate. Think about just the stock market itself. I mean, you're going to be able to trade stocks, DeFi, decentralized finance. The amount of money it moves cross borders every day is amazing. It's slow. Have you ever tried paying your mortgage on a Friday afternoon? It doesn't clear till Monday. Why is that? The internet doesn't close for the weekend. But with altcoins and stuff, the stuff, how things move so fast. And what they do, they offer three things that every business I love has. They're cheaper, they're faster, and they're more efficient. If you offer me a business that can do those three things, it's a win.
But picking the winners, can you tell us what are things you look for? Because as you know, everyone loves sharing their favorite altcoins, and you hear it, oh, you got to get into Cardano, oh, you got to get into HBAR. How do you do your homework there and know, okay, well, where should I speculate?
I have, I have a guy that was actually my first boss at Charles Schwab in 2000 when I started there. He now works with me, and he's been in Bitcoin since day one. So he's come up with an amazing algorithm that I can't even understand, to be honest with you, but we plug it in every month and it spits out with the best ones. Majority of my altcoins or my cryptos in Bitcoin, about half of my cryptos in Bitcoin, the other half spread between a bunch of different, I love Cardano. I love one called Decentraland, which is basically a virtual world where Atari has bought land and they have a store there. I like that one. SOL, which is kind of, the energy behind a lot of the stuff. I own some Ethereum. Some of it's the bigger names. I don't play in like Dogecoin or all that. That's speculation to me. Yeah, that's speculation.
Thank you for sharing that with us.
Yeah.
You started off by saying we met at a gold conference, so I'm going to
Yeah.
bring up gold now. Remind me, did you love gold 10 years ago?
I think I might have liked it when we were talking. I did buy on a dip and I sold near the high, and that's when I managed money. So it's for clients and for myself. But I haven't owned gold in many, many years. And I know your followers love gold, so I'm probably going to get turned off in about 10 seconds. So just listen real quick before you turn me off. I think gold's dead. I think it's a dead asset class. The amount of money, this is from a Grayscale report that they did. The amount of money that's going to be moving from the baby boomers and the silent generation down to Gen X and millennials like us is, I think, $68 trillion of wealth. You're trying to tell me that little bit of people that own gold there, I mean, you might be, because I know you've always liked gold. You're in the gold world. You've been in it. People that I know don't care about gold. I couldn't sell them a piece of gold if they wanted it. They don't want diamonds. They want, lab grown diamonds. They want Bitcoin. They want high growth stocks. They just they don't see the value in gold, I guess. And that's a psychological thing. So I'm looking from a psychology standpoint that I know it's cliche to say, but I think Bitcoin is the digital gold. It is your store of value.
I get that, gold's one of those things and assets that you either get or you don't get, but you can't listen to gold. You can't listen to Grayscale when it comes about gold. They don't like gold.
Sure, but that's like listening to the gold miner, the guy who runs a gold mining company about gold.
Fair enough. Okay, so no gold in your portfolio. Do you like the other metals? Do you like silver?
If I had to own a precious metal, it would be silver. I don't have any. For what we're doing here at Stansberry, it's innovation. So I try to find the companies, as you mentioned when we started this, before they become household names. So I'm looking at companies typically 5 billion or less that have a great growth story that fit into one of my mega trends. So I have a book I'm finishing up called The Roaring 2020s. It's kind of like the book I wrote in 2009 called The Next Great Bull Market. Very similar. In that one, I picked out trends that I like and listed stocks and ways to play it. Doing the same thing here. So trends now, regardless of inflation, regardless of interest rates, of the Fed, anything else out there, price of gold, price of Bitcoin, we know by the end of this decade, there's going to be a lot more electric vehicles on the road. So I look at that and I think, okay, that's a no-brainer. Nobody can argue that. So how do we play that? Do we go out and buy the manufacturers like Tesla or Volkswagen? Do we look at breakthrough battery technology? We could play it that way because we need better batteries. We could break down the batteries into minerals that go into it, whether that maybe be cobalt, lithium, graphite. I mean, there's so many ways to play. It could be the sensors. A car today, they have about $300 worth of semiconductors in it. The car of tomorrow, meaning electric vehicles, about $900 worth of semiconductors. By the end of the century, the decade, where we have autonomous vehicles, everything's connected, over $4,000 worth of semiconductors. So I want to own that semiconductor company because it doesn't matter what car it is, it's going to be full of all these semiconductors and sensors. So that's how I play it. Artificial intelligence, blockchain, you name it. All the trends that, regardless of pandemics or interest rates, will continue to grow.
And to that point, you have a big event coming out October 20th, where you'll be sharing more of your thoughts on how you pick your winners. And from what I hear, you're going to be giving one of your top stock picks of all time. You're going on the record with that?
It's a new company that just came public in the last year and a half or so. And it is when you hear it, then you're like, that sounds boring. But once you hear me explain, which I can't tell you now, but next time I come on, I'll talk about it. But it has, when I picked Bitcoin, it went up 100x since then. And people say, you can't pick that. You can't pick 10x winners. I mean, I'm only 45 years old and I have nearly 50 10x winners. And a lot of them are 30, 40x winners. It can be done. You have to be long-term, don't get me wrong. This doesn't happen overnight. But this company, because it's upending a total addressable market that's called TAM, that is one of the biggest in the world, could literally be a 100x during the Roaring 2020.
Wow. Well, I'll definitely be watching and hanging out with you more often, Matt. Okay, so if you want info on the event, you simply have to go to mattprediction.com. Again, it's mattprediction.com. Matt, welcome again. I'm happy to be working with you.
Thank you. I'll see you in Vegas in a few weeks, I think. Right around the corner. Yeah.
Absolutely. See you in Vegas at the big Stansberry conference. Have an awesome weekend, okay?
Okay. Thank you so much, Danny. Pleasure.
And thank you all for watching. We'll have much more for you. So be sure to stay tuned to stansberryinvestor.com. In the meantime, don't forget to sign up for premier access to offers and videos you can't get anywhere else at danielacambone.com. Thanks for watching.